3:30, we'll begin today's meeting. Public notice was disseminated for today's meeting. The San Miguel County Board of Commissioners will hold a special meeting on Friday, July 31st, 2020, beginning at 3:30 p.m. at the San Miguel County Administration Complex located at 500 West National Avenue, Suite 200, Las Vegas, New Mexico, 87701. The purpose of the meeting is to discuss fiscal year 2021 final budget. Notice to people with disabilities. If you are an individual with a disability who is in need of a reader, amplifier, qualified sign language interpreter, or any form of auxiliary aid or service to attend or participate in the hearing or meeting, please contact the San Miguel County Manager's Office at 505-425-9333 at least 1 week prior to the meeting or as soon as possible. Public documents, including the agenda and minutes, can be provided in various accessible formats. Please contact Commission Administrator at either of the above numbers if a summary or other type of accessible format is needed. Notice was published on the Las Vegas Optic on July 27, 2020. Notice was posted on the San Miguel County website at www.cosanmiguel.nm.us on July 24, 2020. At least 72 hours in advance of the meeting, the following agenda for today's meeting was posted and available for public inspection on the San Miguel County's website at www.cosanmiguel.nm.us and is also available in hard copy at the office of the San Miguel County Manager's Office. Today's agenda, call to order. Roll call, please.
Madam Chair Maria Martinez.
Here.
Vice Chair Chris Nahad.
Here.
Commissioner Harold Garcia.
Here.
Commissioner Janice Varela. Commissioner Max Trujillo.
Here.
Commissioner Nahad, can you please lead us in the Pledge of Allegiance?
Pledge allegiance to the flag of the United States of America, to the republic for which it stands, one nation, under God, indivisible, with liberty and justice for all. I salute the flag of New Mexico, the symbol of perfect friendship amongst united cultures.
Thank you. Changes for today's agenda. We will be removing item number 1 from the agenda. Any questions on that? We move on to item number 2, Resolution 2020-07-31-F2, approving the final fiscal year 1920 fourth quarter report. For review and approve. Presenter, Ms. Melinda Gonzalez.
Madam Chair and Commissioners, do I need this? Madam Chair and Commissioners, I have presented to you a DFA report and a resolution. What happens at the end of the year is I get all the fourth quarter information from our system and I roll it up to the DFA system to provide a summarized DFA report showing all the activity that happened during our fiscal year. This information is used to also begin our fiscal year 2021 budget. I stand for any questions.
Fellow commissioners, does anyone have any questions?
Madam Chair,
Commissioner Nahad?
I have a question regarding the, are we funding the narcotics position this year?
In the fiscal year 2021 budget, we are funding it as a temporary full-time position. Yes, Commissioner Nahad.
Okay, just wanted to make sure. Can you hear me?
Yeah.
Thank you.
You're welcome, Commissioner.
Thank you.
Any other questions? Do I have a motion to approve?
So move, Madam Chair.
Motion Commissioner Trujillo,
Second.
second Commissioner Nahar. All those in favor? Aye. Motion carries.
Aye.
We move on to item number 3, Resolution 2020-07.
Madam Chair and
Melinda Gonzalez.
Madam Chair and Commissioners, you were each provided with an electronic copy of the fiscal year 2021 budget, which included a recap, a detailed recap, or a summarized recap, and then detailed information. We made one change since they were sent to you, and those were to include legislative appropriations. So there's a number of items I'm going to go over with you. The first one is a resolution that's documented in words, and what we're just saying is that now that all cash balances have been reconciled, changes have been made to all funds to account for the changes in cash balances. Also, changes are being made to the state allotment revenue from the State Fire Marshal's Office. Originally, we budgeted the minimum amount that they stated we would receive. Since then, we have received notice of the actual amounts we will receive, which is significantly higher. These increased revenues and changes in cash resulted in increased budgeted expenditures in the fire funds. In addition to the fire funds, capital outlay funds, and special revenue funds, expenditures have also changed based on actual activity in the prior year, leading to changes in either cash, revenues, expenditures, and/or a combination of all three. Based on these changes, the budgeted revenues and/or expenditures are being presented to you for approval. Based on the year activity, there were some changes to operating transfers. Now the changes are made to account for new legislative appropriations, which include monies for a communication system, fire equipment, detention center improvements, buildings and ground improvements, and sheriff vehicles. We also budgeted a transfer of $100,000 out of Fund 206, which is our disaster set-aside fund, in order to utilize it to help offset the cost of the communication system upgrade. And the transfer will only be made to the extent the funds are needed. In addition, there were some adjustments made to recurring revenues and expenditures as a result of the COVID-19 situation. Finally, the county experienced savings in the operating funds for fiscal year 1920. And as a result, we're utilizing those funds for non-recurring purposes. And I have a list on this resolution to give you a synopsis of what we've done, and I'll go over them. We increased the maintenance department budget by $150,000 for building renovation cost. We made some changes to our insurance cost of $50,000. We have miscellaneous expenditures of $140,000 in the event we have other unforeseen costs for the COVID situation. An increase of $50,000 for the treasurer's office for restructuring, for an office restructuring, for safety and health related buildings are set up in their office. We have an increase of $21,000 in the Public Works Department for increased lease costs. We have a temporary Region 4 position that will be budgeted for the full year. We have a transfer to Fund 500 in the amount of $50,000 also for the communication upgrade. And we have a total of $290,500 in grants and services, which include the items that are listed below. They're for the Senior Center, the NMSU Ag Program, the Health Council, Samaritan, Evaya, the Tiger Grant, the North Central New Mexico Economic Development, the Bookmobile, the Chamber, and the Conference for the New Mexico Association of Counties. For Public Works, just to give you a summary of some changes, we had an increase of $20,000 for increased lease costs, an increase of $75,000 for cameras, trash bins, and a water well, and an increase of $60,000 in solid waste for a new software system and other related items. As far as the detention center fund goes, we're using those savings from fiscal year 1920 to be able to hire 3 temporary positions for a 1-year period. So this sheet here that has the yellow highlights is our internal funds. And what it shows you is what the beginning cash is and what the revenues are. So the first line that was on here, so as an example, the one that says general fund, and you see $1.9 million with the beginning cash, those beginning numbers are what was presented during the interim budget. And those were just projections based on the fiscal year 1920 interim, since we didn't have the opportunity at that point in time to meet with all departments. We did modify the fiscal year 2021 interim slightly based on things we know that had changed, but otherwise it followed the 1920 interim budget. So now that the cash has been reconciled, we know where we sit with certain grants. We have carryover monies for particular special revenue funds. We make adjustments, and those lines that are highlighted in yellow are adjustments that we're making to each fund. So in this case, we have some changes to the general fund of cash of $657,000. We have a change in revenue of $221,000, change in expenditures of $541,000 that include those expenditures that I just detailed for you. So you could look at this on a fund by fund basis. Then I also provided to you guys a transfer in, transfer out fund form. You can see where we're moving monies from. Wherever you see something in those columns that say transfers in or transfers out, this is where they're either originating from and or going to. And you'll see that the transfers in of $3,750,303.64 equal the transfers out. And at the side, I've left like a little reference so you could see where the money's going to. So like that first line that shows $19,930 and it has this, an A by the side of it. If you go halfway through the form, you'll notice that those funds are going to Fund 308, which is our juvenile justice grant. And that's how you could look at that. Another document I wanted to provide you was this recap. And the reason I wanted to provide you with this recap is because these funds, we have many funds in the county. We have, I don't know, I haven't counted all the different funds, but we probably have at least 50 funds, 50 or 60 funds. But these particular funds are the funds that drive our operating or our operating related. They include the general fund, the road fund, the crusher fund, the detention center, some of our gross receipt taxes that we have pledged for debt service, our detention center, and our solid waste fund. So what I wanted to do was summarize the fiscal year 1920 information so you could see what was budgeted and what actually came about. And if you look at the bottom right-hand corner, you're going to see that we have a surplus at the end of the year of $1.7 million. And that's why we were able to afford all those changes that we just made and I just talked about a while ago. But what I really want to show you is that those changes aren't because we're being too conservative with revenue, although we are trying to be conservative with revenue because we just don't know where we're going to end up. But if you look at the bottom right-hand, you'll notice that our revenues were $28,000 within budget. That's not a big variance. So we were pretty much close on the revenues. Where we really saw the savings of that $1.7 million or the positive variance of $1.7 million really had to do with expenditures and people not expending all the funds that were originally budgeted for them. And there's a lot of different funds. Some of them are vacancy savings. Some of them may have been capital outlay from these particular funds that were requested but weren't used. And that $1.7 million that got rolled forward, we were able to afford the items that I mentioned and to afford other capital outlay funds and other non-recurring expenditures within the budget. I don't believe, I don't think I passed this out, but some of those non-recurring expenditures, we have $337,600 of capital outlay in the general fund. That's non-recurring. $122,966 in our detention center, and I'll kind of explain that one in a little bit. $80,000 for our maintenance department, the grants that we talked about, the miscellaneous expenditures, the temporary sheriff's position and the temporary detention center positions, insurance deductions, a region 4 set aside of $10,000, some monies for the clerk's office for books and recovery, some planning and zoning design cost, some one-time costs that have to deal with our Caterpillar leases of $40,000. And in this budget, what's kind of hard is we really need to look at the revenues, because we ended up having to reduce some of the revenues when it came to like the detention center housing. Because we are not able to house all the inmates that we were at one time housing because of the COVID situation, we had to reduce the detention center budget by about $120,000. But what the warden was able to do is there are some positions that are currently in fiscal year 1920 that were budgeted out of his normal operating account. And he was able to, this fiscal year, move those positions for a one-time time from his operating account to a grant fund, which will allow us to like offset some of those lost revenues. And then the monies that were originally set aside for those salaries, he's going to use for capital outlay, because he has to fully expend those grants, and those grants don't allow him to buy capital outlay. And he's worked with the state, and they're going to allow him to use those funds for employment purposes. One of the things also that's in this budget is we had a reduction of workers' compensation premiums of about $140,000. That's a one-time thing. So next year, in fiscal year 21-22, we're going to have to see that increase in expenditures. So we have to be prepared for that. We also have about $55,000 in other one-time revenues, which include the $35,000 from the settlement from the lodger's tax settlement, because it wasn't received until this fiscal year, and $20,000 from the other settlement that I think was settled with the solid waste issue. So I wanted to point those out to you guys to let you know that. Another document that I provided to you are supplementary schedules that are that we have to submit to DFA. Some of it is like additional information documenting how many full-time people we have and part-time people. It asks for certain things such as the county manager's salary, county attorney's salary, total salaries, the budgeted audit costs, safety net care information, and the Medicaid information. Then the next sheet is a property tax sheet. And this property tax sheet is just a preliminary sheet that helps us figure out what our property taxes may be. It's not going to be as intense as some information that we'll be going over in August or September once we get the mill levies. But what I was able to do is get the 2019 abstract numbers from our county assessor and apply them against our current mill levies for each of those items, and was able to use these numbers in order to populate our budget. If you remember last fiscal year, we were going to try to increase our budget for property taxes based on the mill levies, and DFA wanted us to hold out and really see what the results of those property tax collections were. So I'm hopeful that they'll allow us to increase our property tax revenues. It's only like a $70,000 increase, but there is a $70,000 increase. The next sheet, I know it's very small to see, but this is a DFA format, and I could give it to you in any other kind of format so you guys could see it. But this lists all of our outstanding debt. So there's different sections that they fall in. And what you'll see is that there's an issue date for each of the debts that we have, the interest rate, what the original amount of the debt was, what the outstanding principal is at the beginning of the fiscal year that we're beginning, the principal that has been budgeted and is due for those particular outstanding issues, and the date that the principal has to be made, as well as the interest that is going to be due within the fiscal year and when that interest is due. It's also going to give you an outstanding principal balance at the end of fiscal year 2021. Okay. The next sheet is a sheet called form. It's a S5, and it's a detail of additional reserve requirements in excess of LGD reserve requirements. So one of the things that we try to do every year is that DFA requires us to have a 3/12 reserve requirement on our general fund. So anything that we have budgeted as expenditures, we have to make sure that we're going to end with a cash balance that equals or exceeds 3/12 of those expenditures. But what we try to do internally within the county is not only do that for the expenditures, but also do that for our transfers out, because we have so many transfers out, like to the detention center, to solid waste, to the road department. So we want to make sure that we don't end up in a situation that we can't afford it the next fiscal year. So I have, and the same thing with our debt service requirements. So we have self-imposed, I guess I'm calling it self-imposed reserve requirements, where we don't want to spend all the cash that we have that are above the 3/12 reserve requirements, because we want to stay in a safe position for the next fiscal year. Also, I have in here listed ADA improvements. Even though we got monies from the legislature and we did set aside some additional funds for building improvements, there still might be a need for small ADA compliance changes that we might want to do over the next several years. This particular form is also utilized by DFA, of course, and the Department of Transportation, and when they're trying to determine whether we could qualify for a match waiver. Okay. The next document, it's called a analysis of selected revenues, and it has our gross receipt taxes. So it lists all the different types of local option gross receipts that we have. It has the enactment rates, it has prior year actual numbers, the current year, which is actually fiscal year 1920, what was budgeted, and then the fiscal year 2021, what the final budget is. Column H is whatever is within those budgets that's going to be intercepted by the New Mexico Finance Authority for debt service. So some of our debt service that we have, the New Mexico Finance Authority, before it comes to us, it gets intercepted, it gets placed in our name, but it gets held in trust through a debt service requirement fund. And then when the debt becomes due, they pull the money from that money that's being held in trust. The next document that is here, it's a schedule of insurances. And these insurances are budgeted within our budget. So our healthcare insurances that are paid for our personnel, our portion comes out to $835,944. Again, this is just a projection. It's based on the people who are currently in those positions. And of course, as vacancies happen and positions get moved, or there's movement with the positions, those numbers can fluctuate. As far as our general liability insurances, which include like auto and building and boiler and insurances like that, that's $269,330. A while ago, I mentioned that our workers' comp was reduced by about $140,000. So this year we're going to be paying $101,000. But next year we're going to see that increase of roughly 140, depending on what our exposure is this year. Our law enforcement insurances that we're going to pay are just right under $300,000. Those are shared by the general fund for the sheriff's positions and the detention center for the detention center officers. And then we have our emergency medical insurances for our volunteer firefighters called BFIS, and that's in the amount of $48,000. And that's for if a volunteer gets hurt during something that they're doing on behalf of the county, their insurances for their buildings and or vehicles are actually under our general policy. And then the final sheet that is here is a schedule of investments. So we have a total of $1.1 million in CDs, and all those CDs are actually tied to our volunteer fire departments. They have a very large ending cash balance at the end of the year. A lot of times they're trying to accumulate money for certain projects. So rather than just having the money sitting in the bank, we just tie it up into CDs. And we look at that on a yearly basis. I think all of those are held for a one-year basis. That third CD that you see is tied to the Tecolote Volunteer Fire Department specifically. And those are reserve requirements that are required to be set aside on an annual basis for a USDA loan that they have outstanding. And those monies sit out there until such time that the loan is paid in full. And then those monies, if they're not used to pay the loan, they're reverted back to the volunteer fire department. I stand for any questions.
So Melinda, on those CDs, is there a vehicle that could, are we gaining interest on that money in those CDs?
On the CDs, yes, we are, Commissioner. I don't know what the exact rate is. I don't have the rate of the CD, but what the treasurer's office does is once they mature, they'll reach out and they'll say, you guys need to reinvest them. So I'll work together with Andrew and we'll figure out whether we need to either increase them or if we could just roll them over with the interest, or if we need to decrease them if we need to buy something. We just determined an amount that is going to be invested, and then they go out for bid for whoever provides the highest rate of return on a certificate of deposit.
Okay, so there is a mechanism to invite other investment companies or whatever to hold that money at a better interest if it's possible?
Well, Madam Chair and Commissioner Trujillo, the Treasurer's Office actually just right now currently just works with certificates of deposit. So they just reach out to our local banks to see who would provide the highest rate of return. We could work something else out. We'd have to do that with the Treasurer's Office to see if those could be invested in maybe something that would offer a higher yield. But right now it's just CDs.
Okay, because I know that there's some like no risk vehicles that you can put money in, similar to a CD, but they pay a little bit better.
Okay.
I don't know, maybe at some point it might be something to look at, maybe on their renewal or something.
Okay, that sounds like a good idea. I'll work with the Treasurer's Office on that.
I have a question, Melinda. With regards to the fund transfers, I noticed that the Health Council were increasing it by $5,000 this year compared to last year. Was it 10,000 last year and is it 15 this year?
Madam Chair and Commissioner Garcia, I'm going to have Dr. Martinez correct me if I'm wrong, but I believe that the request was for $15,000.
Okay.
I haven't personally seen it, but I believe what ends up happening is last year we ended up doing pretty much 15,000, but really 10,000 is we get reimbursed by the Department of Health like $4,000, so it comes out to about $10,000 out of pocket. But we have to budget for the whole grant amount. And in this particular one with the request, I really don't know if the Department of Health had a share in it. So I can't remember. Sure.
And then one more question. Are you comfortable, Dr. Martinez, with the $40,000 for the conference?
Madam Chair, members of the commission, that was the original proposal for 40,000. But if we do have increased costs, for example, my recommendation is to purchase rent a tent. And if that's going to cost a little bit more money, I definitely want to bring that to the commission. But right now, I'm pretty sure 40,000 will cover the tent and plus the meals.
Right.
But again, I want to, if we do exceed, I definitely want to bring that to the commission to request additional funds.
Will there be flexibility at a later date?
Madam Chair and Commissioner Garcia, I'm assuming there will be during our mid-year budget hearing. We could kind of relook at it to see where we are. At that time, we'll probably know what a lot of our costs are, just because we're so much further in the planning process. So yes.
All right. Okay. Perfect. Thank you.
Any other questions? Do I have a motion to approve?
So move, Madam Chair.
Second, Madam Chair.
Motion by Commissioner Garcia, second by Commissioner Nahara. All those in favor? Aye.
Aye.
Motion.
Madam Chair. Madam Chair. Madam Chair, members of the commission, I just want to thank all of you. I know across the state of New Mexico, we have municipalities and counties that are struggling financially. And I just want to thank you for your leadership and for your support. We're very fortunate to be in the financial situation that we're in, and we're able to fund nonprofits and so forth. So again, I want to thank the commission and Melinda for their work. Thank you.
Another comment that I should have, Madam Chair and Commissioners, if I may also make another comment that I should have discussed, is we were keeping an eye on the grocery receipt taxes because we really thought that that was going to be a significant decrease. So what happened is in June, we received what actually transpired in our community for the month of April. And for the month of April, that was the first month that we were all like under restrictions and stuff. So the amounts that we got in June for April's activity did decrease, but it didn't decrease as significantly as we thought. And then we also kept an eye on it in the month of July for what was May activity. And it also was it was actually a little bit higher from what we received in June. But we're comfortable with the grocery receipt taxes now. I mean, we really don't know what could happen. We're going to have to keep our eye out on it. But really from fiscal year 18-19 to fiscal year 19-20, our grocery receipt taxes really had started to skyrocket, which was very fortunate. And that's why the numbers that we're using now aren't reflective of 18-19, but or of what we received in 19-20, but because the 19-20 grocery receipt taxes increased so much, we're able to stay somewhere in between what was actually received and what was budgeted within fiscal year 18-19. And another thing I just wanted to mention is, again, during the interim, we just submitted a budget to meet the statutory requirement, and we hadn't really met with the departments. So after that, we submitted the budgets to each department and asked them for any kind of input, and they provided us input, and we modified any budgets based on that input. So I just want to thank all of you guys, just like Dr. Martinez had mentioned, and Dr. Martinez and all the departments for working so hard. And we just need to be careful because, again, we don't know what the future holds. We don't know what PILT is going to do. We just need to keep our eyes on certain things. Other revenues that we saw decreasing are gasoline taxes and motor vehicle taxes. So we just need to really be cognizant of that. And we'll just keep a really good eye on that and see what's happening on a regular basis. So that way we could come back to you if we need to, if we see anything that we should be concerned with. But hopefully we'll be able to get through this fiscal year as is. Okay.
So move, Madam Chair.
Second, Madam.
Aye.
Aye.
Aye.